Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. In this installment, we're going to talk about retiring allowances or severance payments when you leave your employer. So I think you'll enjoy this particular video. We're going to talk about it in the context of how you can use your retirement income plan to give you clarity on how you should be handling those options. Now, if you're new to our channel, make sure you hit the subscribe button. We're posting content all the time on different aspects of retirement, whether it's the accumulation phase, the runway phase, or actually being retired. So if you don't want to miss the content, subscribe to the channel. Now, for many people, as they approach retirement, one of the things they're going to start thinking about is how am I going to handle if I have a package like a severance or a retiring allowance, how am I going to handle that from a timing standpoint? When am I going to get the money? Are there ways that I can tax shelter some of that capital? So many organizations, mostly large corporations or government agencies, provincial governments, federal government, crown corporations, universities, will often have a formula that drives a certain lump sum payment that you accrue and then gets paid out to you when you transition into retirement. So the challenge is, for most people, the majority of that money is going to be taxable in the year that you receive it. Now, there are a few ways that you can try to reduce that tax burden. So let's cover off some of the ways. Now, one option is for people who have been with the organization for many, many years, for years of service up to and including 1995, there's a provision in the tax code that you can tax shelter some of that retiring allowance or severance. So let's say I started working for the organization in 1990, and so I have 5 years between 90 and 95. When I eventually retire, they'll allow you to take $2,000 times those 5 years, or $10,000 can be rolled directly into your RSP account when you retire. So let's say my retiring allowance was $50,000. I can move $10,000 of that as a direct rollover to my RSP account, and it doesn't count against my RSP contribution room. So that's the first sort of strategy. Now, increasingly, there's fewer and fewer people in that situation in the workforce, but it still is an opportunity for some people. The second opportunity is, do you have RSP contribution room, so unused contribution room or carry forward room? So let's say that I had $10,000 of unused room, and that would allow me then to let my employer know. Usually they need confirmation from your tax assessment notice that you have that available room. So when you transition from your employer, let's say you retire, they'll pay out $40,000 as taxable income to you, but $10,000 of it they'll allow you to direct to your RSP account without holding back any tax. So that's the second strategy, is you might be able to roll over some of that severance payment or retirement allowance to your RSP account to offset the tax burden that might be triggered. And then the third issue is the timing of the payment. So sometimes employers will allow you to spread those payments over 2 calendar years. So you get the income taxable over the 2-year period, which potentially might reduce the tax burden. Sometimes they'll allow you to push the full payment into the next calendar year. So for many people when they're retiring, if they're retiring in a transition year where they are working for a good chunk of the year, then they retire, then they get the severance payment, then sometimes they'll allow you to push that payment into the next year when the assumption is your income overall might be a little bit lower. So you just need to talk to your employer about what the options might be for you, whether you can spread those payments out. And then, of course, the ideal time to retire, if you have these large retiring allowances or severances, is to retire at the beginning of the year so that you have no other sources of income, so that can come into you as income and be taxed, as opposed to coming to you and near the end of the year where you've already earned most of your employment income and now you're getting this big fat taxable income piece coming to you. So just a quick little update on those options, and the way that we use the retirement income plan is we basically use it to model those different scenarios for people. So if you want more information about retirement planning and try to get educated on some of the important aspects of it, there is links to some short courses that you can grab hold of in the notes to this video. As well, there's a link that will take you right to our website that talks about how you can get a retirement income plan. And if you want to start a conversation, there's a link to take you to our website to email us. Anyway, I hope this video is helpful, and wishing you all the best in your retirement planning and your overall wealth planning. You take care.